Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Aditya Shah, Chief Investment Officer, GST Investments. Also, do not forget to send your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So, let's begin. Aditya, good evening and welcome to the show. We have Bhanu Pratap's question for you first, and he says that he's doing an SIP and he wants to achieve the corpus of 5 crores, and he is right now investing in Parag Parekh Flexi Cap. He has Quant Tax Plan, SBI Equity Hybrid, SBI Focused Equity, and he wants to understand which funds he can hold and from which fund he can make an exit strategy. Also, his time horizon is 20 to 25 years. And you need to help him understand if there has to be any increase in the SIP amount. So, first, what about the funds?
Ma'am, if the investor is wanting 5 crore rupees at the end of 20 years, if I assume that, and I also assume that 10% return is possible in a mutual fund, the investor must SIP at least 50,000 per month. The investor is not doing that right now. Considering the fact that the amount is much lower, there can be two options that the investor can choose. Point number one is elongate his time horizon to about 25 to 30 years, or he must increase his SIP. It is very, very difficult to nearly double the SIP amount in a short duration of time. So what he can really do is he can step up his SIP every year for by at least 10%. That's the first point that I wanted to make. Second point is the choice of funds is really okay. Parag Parekh Flexi Cap Fund, SBI Focus Fund, and Quant Tax Saver Fund is just look fine. No problem as such. You must increase the SIP amount in the SBI Equity Hybrid Fund, or he can move to a pure play small cap fund. Also, since his time horizon is about 20 years, so I will suggest a DSP Quant Fund if he wishes to substitute the SBI Focused Equity Fund. Otherwise, the portfolio looks okay, not a problem as such.
All right, so that will be all for Bhanu Pratap. But then we have our next viewer online, Krishna Teja from Hyderabad. Good evening, sir. How are you doing?
Yeah, I'm doing good. Thank you.
All right. Could you tell me the name of your funds that you've invested in?
Recently, I have started SIP of 4K in the ICICI Prudential Technology Fund. So,
Okay.
yeah, I'm aware of that. Now the IT stocks are under pressure. So, I would like to take some time at this point of time to take the risk to get the maximum returns from this point. So my time horizon is like 7 to 8 years. This is for my daughter's higher education. Okay. So I would like to take suggestion, as banking sector is also under pressure. So should I continue this SIP 4K in the IT sector, or can I split this to the IT and banking 2K on each? So it would be great if you can provide insights on this.
So you have a specific large cap fund, flexi cap fund?
Yeah, flexi cap means I have a tax saver fund. That is Canara Robeco tax saver fund. And I have Nippon India S&P Sensex fund. And one small cap is Quant Small Cap Fund.
All right.
These are for my long term, like retirement fund, like. But whatever the 4K, I'm started investing in the technology fund. This is for my daughter's higher education. So
okay. When you say you have
like
added a technology fund, this is what, months back or years back?
No, I had only one SIP. I mean, I started last month itself.
Okay. So you are aware of the fact that you don't invest in mutual funds the way you invest in specific stocks.
Yes.
So whenever you are picking up a sector-oriented fund, you need to hold on to that fund for a particular period of time, which has to be more than 5 years at least,
Yes.
and you have to track the kind of movement the sector is specifically going through, which right now is not a
Right.
very good scenario or a rosy picture when you talk about the IT sector. Okay. Similarly, when you're talking about banking, having a sectoral exposure is not wrong, but then you need to hold on to that particular sector for a longer period of time. It's been 4 months you've added ICICI Technology Fund. Aditya, your take on this? He wants to hold this for 7 to 8 years.
As I have been repeatedly continuously saying, technology funds carry a sectoral risk, and sectoral funds are only for those who are highly risky individual investors. The investor must assess his risk profile and think if he wants to take on this amount of risk. That's the first point. Second point is technology is undergoing a severe downturn at this stage. We've already seen some of the US banks failing, and they are directly connected to the technology sector. So, in my view, at least the next 2 to 3 years will be very, very difficult for the technology sector. And from there on, the technology sector will do well. So, if you have a longer time horizon, only then please invest in the technology sector. ICICI Technology Fund is a good fund to invest in, so no problem as such. Invest there. However, have at least a time horizon, as you have written, of about 7 to 8 years, and don't get dissuaded by the near-term underperformance of the fund. Again, with the banking fund, we've seen that the banks have not really performed as stock prices for the last 1.5 to 2 years. And it's a great time to be loading up on the banking sector. However, again, they carry a sectoral risk, and you should only invest with a longer term time horizon and not a shorter term time horizon.
All right, that will be all for you. Before I move on to our next viewer, Aditya, who is Tuhin Sarkar from Kolkata, before I take his query, what would you like to tell our investor who plan a short-term play in sector funds, like the gentleman we just spoke to? They tend to time the momentum play and the way they do it in stocks. Why is it important to understand how a mutual fund functions, and especially a sector or a theme-oriented mutual fund?
And what you think happens is sectoral funds go through up cycles and down cycles. What generally retail investors really do is when the sector does really well, they tend to invest in that stock or in that sectoral fund, and then forget about it. And then there's a down cycle, and all of their gains are wiped out. So timing of entry and exit in a sectoral fund is really, really very important. That is something that one needs to really consider. Considering the fact that a retail investor must have a job and does not have the time to understand the entry and exit from these sectoral funds, it is a much better option to invest in a diversified fund where the fund manager takes the entry and exit call and you don't have to do anything. It is like telling a doctor when you go into a sectoral fund that treat me this way. If you don't have any specialization on how to treat a disease, leave it to the fund manager and the fund manager will decide. If you are a highly risky investor, then you can time the entry and exit into the sectoral funds. However, for 99% of the investors who are watching this show, I will not suggest them technology fund. Rather, try to invest in a diversified flexi cap fund. If you have a longer term time horizon of about 15 to 20 years, then a small cap fund will also do for you. However, stay away from sectoral funds as during the down cycle, the drawdowns can be severe. We've seen some technology stocks fall as much as 10% yesterday, and there have been drawdowns in the technology funds. So, in my view, stay away from them. Only those who can tolerate the high amount of volatility and risk should go ahead and invest in those funds.
Right, we move on. We have Tuhin Sarkar from Kolkata on phone line with us. Hi, good evening, sir. How are you doing? Tuhin?
Yeah.
Hi, good evening.
Yeah.
Thank you so much for sending us your query. I think you want to know a mid-cap fund?
Yeah, I want to know a mid-cap fund. I'm already investing around 40,000 through SIPs for 3 to 5 years.
What's the fund
I
mix
want
like
to
in
know
your
a
portfolio right now, Tuhin?
Pardon?
What is the fund mix like in your portfolio right now?
Well, I have flexi cap, I have large cap, I have small caps, I have focused fund, but I don't have a specific mid cap fund in my portfolio.
Do you think you really need one because you have a flexi cap, you have a focused category as well?
I just wanted to know which is the ongoing best mid cap fund right now. Mm-hmm. But I have these portfolios in my these funds in my portfolio right now.
And you are doing an SIP of 40,000 already in this mid cap. You want to invest
40,000 in various schemes per month, and I want a specific mid cap fund if possible.
So in 3 years' time could be very less for a mid cap fund. Do you mind
I understand that. It can be the period can be between 3 to 5 years.
I would suggest more than 5 years, but then let's let Aditya answer this question. Aditya, first of all, do you think he really needs a mid-cap fund? He's been asking for a specific mid-cap, but then do you think his portfolio already diversified well enough?
Ma'am, you've hit the issue spot on. Point number one is there is absolutely no need for a mid-cap fund. Generally, what retail investors think is that they need to have one fund in small cap, mid-cap, flexi cap, large cap. There's no need to have so many funds. If you are already investing in 3 funds, I think for a 40,000 rupee SIP, it's more than enough. The first point. The second point is for any mid cap or a small cap exposure, 3 to 5 years is a very, very less amount of time given the volatility in the market. To invest in a small or a mid cap fund, at least 7 to 10 years is required. I will not suggest the investor to go ahead and invest in a mid cap fund. I will suggest to increase his SIP in a flexi cap fund that he's already investing in. However, since the investor is asking for one of the names of the fund, I will suggest the DSP mid cap fund. It is well run and it is well managed by the fund manager. That is one. But I will not want him to add this fund at this stage. Elongate your time horizon, and if you have 3 to 5 years of time horizon, stick to flexi cap funds.
And if at all, whenever you plan to add any mid-cap fund, in fact, he also has a small cap fund in his portfolio. So it's advisable if you hold it for 7 to 10 years. And whenever you add a mid-cap fund, have the same kind of time frame of 7 to 10 years. We have JS Rao on phone line with us from Hyderabad. Hello, Mr. Rao. Good evening. Thank you so much for sending us your query, sir. How are you doing today?
Actually, I wanted to know about the whether nomination is required or not.
Absolutely. Nomination is definitely required, but is that the only question?
Yeah, that's the only question.
You are withdrawing the funds in SWP. Okay.
Yeah.
All right, Aditya?
Ma'am, according to the regulators, latest circular, nomination will now be required across all mutual fund holdings, be it a single holding, be it a joint holding. So it does not really matter if you have a joint holding. You will have to go ahead and give a nominee. How you can go ahead and do that? You can write to the mutual fund company to have a nominee inside your folio, or you can visit the CAMS or the RV office where they will give you a form where you can fill up the nominee. Having a nominee is very, very important because in case something happens to the unit holders, the units can be transferred into the name of the nominee. So yes, nominees will be required, and you need to visit the mutual fund company or the service providers to mutual fund companies like CAMS and CARVI in order to get this nomination done.
All right, we move on, and next question is via email, SB Sivakumar from Madurai, and he says that he is 53 years old. Okay, I think we have him on phone line, Mr. Sivakumar. Hi, good evening, sir. How are you doing? All right, we move on and we'll just take his question. He says that he's 53 years old and he's working in a private sector, and he wants to understand that if he invests 10 lakh in a balance advantage fund, how much can he withdraw through SWP after 7 years? For that, we really wanted him on the phone line because we wanted to understand how much he would want after 7 years, which I think would be his post-retirement phase, and for that purpose, he's also investing. But a lot of calculation needs to be done. What could be the steps to help him get the calculation right and understand how much amount is needed for him?
See, ma'am, if he invests about 10 lakh rupees today, and if you take the time horizon of about 7 years, assuming a 10 to 12% return in a balance advantage fund is not bad. And then you will have anywhere between 25 to 30 lakhs inside the client's portfolio. That's the first point. Second point is, how do you withdraw this money? You can withdraw any amount of money you require. What you need to really specify is what is the time horizon of this SWP that you are really looking
Aditya,
for.
I think we can get more clarity because we have Mr. Kumar on phone line with us. Good evening, sir. We are taking your question on the Money Show. Thank you so much for sending us your query. So we
Yes,
want to understand, after 7 years, what would be the amount that you would like to withdraw via SWP?
yes, yes, madam.
So what would be the amount?
What percentage I should withdraw? That is my query.
So that depends on your requirements, sir, because I believe this is your post-retirement phase, and you might want to have this amount at that time when you don't have an income right now. At that time, not right now. So,
Yes.
so how much would you need monthly?
I want to protect my 4 to 5%. I want to protect capital as well as the earn this amount.
Okay. Aditya, anything else you want to ask?
No, I do not get him. Can you repeat what he said?
I think his focus was on capital protection, what he is investing. Is that right, Mr. Kumar?
Yes, madam.
All right. So, Aditya, we don't have a clear figure. He wants to understand how much he'll be able to withdraw. So, maybe you could just give him a rough calculation and the minimum amount that can be withdrawn via SWP.
So, as I already said, he will have nearly about 25 lakhs in his account. Post 7 years, I have assumed a 12% return that he will get on the balance advantage fund. Then what he needs to do is he needs to understand what is the time horizon over which he wants to withdraw that money. If it is over a period of 4 to 5 years or 10 years, then he can withdraw anywhere between 20 to 40,000 rupees every month through a systematic withdrawal plan, and that money will come to his account. So the real input that he needs to look at is what is the time horizon that he's really looking for. The purchasing power of his money is already protected when he's invested in a mutual fund, and he can get about 10 to 12% returns. That's not really a problem. The withdrawal horizon needs to be understood by the investor, and then he needs to move on from there.
All right. We move on to our last query of the day, which is from Praveen, and this is an email. His goal is to build wealth for retirement, and he can keep investing for next 15 years. Currently, he's investing 50,000 Parag Parikh Flexi Cap, PGIM India Flexi Cap, HDFC Flexi Cap, Quant Flexi Cap. He has only flexi caps in his portfolio, and he wants you to check the health of his portfolio, and he would like to have an aggressive strategy, and he's also investing 50,000 ICICI Nasdaq 100 fund. All right, so so for the purpose of diversification, okay, one can have more than one flexi cap in their fund, Aditya, depending on the kind of bias the fund has. You know, it could be a large cap bias flexi cap fund, or it could be a mid cap, small cap bias. But then having 4 flexi cap, how can one differentiate in the kind of flexi cap they want to have? If at all, it has to be more than one flexi cap category.
The first point is, so many flexi cap funds is not really required inside his portfolio. Since he's an aggressive investor, he can diversify his investments. The criteria to identify the flexi cap fund is that you need to look at the fund manager strategy. If he's following a large capish bias, or mid capish bias, or a small capish bias. That's the second point. Third point is, I have suggested 5 funds for him: Parag Parikh Flexi Cap Fund, PGIM Flexi Cap Fund, DSP Small Cap Fund, UTI Nifty Next 50 Index Fund, and ICICI Nasdaq 100. He can SIP his amount equally into all of these 5 funds, withdraw from the other 3 flexi cap funds that he's already investing, and SIP that money into these 5 funds. So this is the strategy that he should be following. So many flexi cap funds are not really required. Since his time horizon is also longer, he can go ahead and invest across the mid cap and the small cap space as well, and that will ensure that he gets a little bit of value.
I I think that will be all. Thank you so much, Aditya, for being on the show and helping our viewers with their financial portfolio queries. And before I sign off, I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your queries, be it mutual fund, insurance, credit card, tax, or anything related to your investment. Just send us your query on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.